Welcome to Property Focus, I'm James Mitchell. Making headlines this week, Sydney property bottoms out, while the Brisbane market bounces back, and an industry figure speaks plainly about negative gearing. But first, to our lead story. The Perth property market is finally levelled out, and is now ripe for investment, one leading economist has claimed. According to Australian property monitors, the median house price in Perth has dropped 5.7% in the year to September. But the market is set to rebound in the new year, and investors can expect double-digit growth. Australian Property Monitor's senior economist, Dr. Andrew Wilson, said,
I think Perth is a very good bet for investors. I really do. I think that Perth is now approaching the bottom of its price cycle. I wouldn't be surprised to see up to double-digit house price growth over Perth by the end of 2012. I know that's a big call, but certainly the Perth market has been flat for a long time, and the potential is there for it to start to lift off from to be approaching the sort of growth numbers that it had back in 2006 and 2007.
Negative gearing continues to be one of the biggest selling points of property investment for everyday Australians. Last year, $5.5 billion was refunded through negative gearing, according to the Australian Taxation Office. But despite its popularity, negative gearing should not be used as an excuse to invest. Property Investment Professionals of Australia chairwoman Margaret Lomas said,
You should never invest because you can negatively gear a property. And most people don't understand what negative gearing means, what positive gearing means, and what positive cash flow means. Understand that all those terms refer to is a tax outcome, not a strategy. It's a tax outcome.
The Sydney market appears to have flatlined, while the Brisbane market is making a comeback, according to RP Data Chief Executive Graham Mirabito. Speaking to Property Focus, Mr. Mirabito said that the coming months would reveal whether these movements will continue.
Sydney is performing reasonably well in that it appears to have bottomed out and showing some glimpses there. Brisbane's making a bit of a bounce back, which is good to see. So we're seeing some positive results there in Brisbane and in Adelaide. So it's early days yet, but we think the next couple of months will be quite telling as to whether or not they're sustained bottoming out or indeed bouncing back.
And don't forget that the November issue of Smart Property Investment is now on newsstands. Pick up a copy today to find out where you can invest for under $300,000 and achieve a 7% return. We review the nation's top 30 suburbs, plus a $40,000 investment with a 13% yield. That's what's making headlines this week. I'm James Mitchell. Thanks for joining us.